Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. GigaCloud Technology Inc. is a company operating in the B2B e-commerce sector, specializing in the sale and logistics of large products. It operates the GigaCloud Marketplace platform, which connects manufacturers with resellers. Through its end-to-end logistics model, the company benefits from the increasing demand for efficient supply chain solutions in e-commerce. It is currently active in the dynamic global logistics and e-commerce market, which is expanding due to the digitalization of commerce and shifts in supply chains. However, economic slowdown and the ongoing trade war between the United States and China pose potential risks to its business model. In the third quarter of 2024, GigaCloud Technology reported earnings per share of 98 cents, a gross margin of 25.47%, and a net margin of 13.41%. The return on equity reached 42.89%, indicating strong profitability. The quick ratio stood at 1.30, and the current ratio was 2.13, suggesting that the company has sufficient liquidity to cover its short-term obligations. The inventory turnover ratio of 4.75 implies that products do not stay in warehouses for long. The company is delivering solid financial performance, but it is not free from risks related to global trade. The company's market capitalization is approximately $760 million, with a projected operating income of $133.78 million for 2022 based on its liquidity ratios. The company appears to have sufficient cash reserves to cover its expenses. GigaCloud is generating positive earnings, and its market capitalization is relatively low compared to its cash flows, suggesting that the stock may be undervalued. For 2025, the expected earnings per share stand at $3.48. While for 2026, they are projected to reach $4.7, the average price target set by analysts, is $50.5. The current price-to-earnings ratio is approximately 6.2, which is significantly lower than in previous years, indicating that the stock may be undervalued relative to its future earnings potential. Recently, the company has come under scrutiny following a report by Grizzly Research, which suggested potential discrepancies in financial statements and concerns over its dependence on Chinese suppliers. GigaCloud Technology has denied these allegations, asserting that its business model is transparent and effective. No significant insider transactions have been recorded, meaning that executives are neither aggressively selling nor heavily buying company shares. GigaCloud Technology is highly exposed to China, meaning that an escalation in the U.S.-China trade war could negatively impact its operating costs. If the United States raises tariffs on Chinese imports, GigaCloud's operational expenses and profit margins may decline. In the long term, the company might shift parts of its supply chain to other Asian countries to reduce reliance on Chinese suppliers. The current level of short selling in GigaCloud Technology is moderate, but the company's low valuation and strong financial performance could trigger price increases. If the market perceives the stock as undervalued, a short squeeze may occur, though the conditions for such an event are not yet extreme. The economy is currently in a phase of slowdown or recession, characterized by rising unemployment and declining production, employment, investment, demand, and prices. In such conditions, the best-performing sectors are healthcare, energy, and utilities. GigaCloud Technology does not belong to these sectors, meaning that its stock may struggle in the short term, though it appears undervalued from a long-term perspective. In summary, arguments in favor of buying GigaCloud Technology stock include its low price-to-earnings ratio, strong profitability, solid financial results, and promising growth forecasts. Additionally, analysts have set significantly higher price targets compared to the current share price. Arguments for selling include potential risks related to the trade war, challenges from the economic slowdown, and concerns raised by Grizzly Research. If an investor is willing to hold the stock for the long term, it may prove to be an attractive investment, whereas in the short term, there are notable risks. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014, on market abuse, and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016, supplementing Regulation EU, number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various Internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.